afternoon, good evening, traders from across the globe, and welcome to the 826th edition of Short-Term Trading Live with Oscar. Traders, good evening, good morning, and good afternoon. My name is Oscar Carboni. I have come live to you out of the pits in Wall Street, where I traded and spent many, many years in this industry and learned a lot of great tips, tricks, and techniques that I have mastered, and I show to you in these nightly videos. Traders, this video is being filmed on Wednesday night for trading Thursday, February 16, 2012. Before we get into the video, as we know, futures trading is extremely risky, can cause substantial financial loss if you do not understand the risks behind trading, and if you do not have risk capital, you certainly shouldn't be trading futures. If you do not recognize that a stop is your best friend, you absolutely shouldn't be trading futures. We all know that stops keep us alive in this business. Well, let's go forward for trading on Thursday, traders. The brakes come on, and sorry to say, we have a red omni on the board. You know, we clap softly for those red omnis. We have a red omni on the board. We have a day that the market will come down again, just like it did yesterday from what we're seeing. Traders, we know we're in a bull market. We know that we're supposed to be buying dips, but at the same time, we also know that the technical analysis rules our decisions, and the charts know best. And here is what's going on for trading on Thursday. The S&P and the NASDAQ cannot, and I repeat, cannot continue to rally if the leader of U.S. indices, the Dow Jones Transportation Average, is faltering. Now, this is something I've said in the last 2 or 3 videos where I stood in front of the camera showing you charts that yes, we're in a bull market and yes, we're buying dips, but in no way will it continue if the leader, the tranny, does not pick up some power here, pick up the rear, and start leading. Well, it has reached the point where the power of the trend of the Dow Jones Transportation Average starting to drop is putting weight on our ES and NASDAQ, rendering us a red omni on Thursday in the ES, the NASDAQ, the Russell, the Euro. These are some of the markets that we think will be going down because of what we've seen in the analysis. Traders, I'm going to show you charts in a couple of moments that will show you exactly why there's just no way we're going any higher than these guys, because the tranny just does not want to come with us. Traders, if you like the analysis that you are about to see in this chart segment, come on down to livewithoscar.com. Come into my free trading rooms. Don't trade alone. I am there running those trading rooms, teaching my OMNIacs the techniques and tips that I'm telling you about in these videos, and keeping them in tune and in check with the markets. So I'll see you at the site. With no further ado, let's go look at some charts. Okay, traders, here we are. The Dow Jones Transportation Average has begun to deteriorate, taking the NASDAQ and the emini S&P with it. The line has been breached. The market started to come down, went back up, tested the line, has broken, and look at what happened on Wednesday. That, my friends, is a breakdown. If the leader is breaking down, I assure you the followers, ES and NQ, will be right behind the leader. So there is too much pressure from the downside that's been coming lately in the transportation average for us to continue to expect the emini or the NASDAQ to rally any further. Without the leader following, if the leader is going to lead down, the followers are going to follow it down, and that's the way it works. Dow Jones Industrial Average, The other big broad index also failing, and basically traders, not only has it been lagging terribly on this rally compared to ES and NASDAQ, this is basically a flat top. You had one little jet through right here, but barring that, it's basically a flat top. And now, as of this evening, the Dow is out of the channel. That is bearish too. The leader taking one of the first followers, the Dow Jones Industrial Average, with it. Then we look at the E-mini S&P. Traders, look what happened here. The E-mini S&P maintained its channel up until tonight, or I should say the close on Wednesday. As we're opening Thursday or Wednesday evening for Thursday's trading, we drop right below that channel, and I think the weight of the tranny is taking it down. That is breached. We go down for at least another day here. Traders, the NASDAQ. This almost looks promising, right? It looks like the NASDAQ, hey, wait a minute, that's a big leader, it may hold. No chance. There is no way that this is going to hold. It's already on its way down. It's testing support. Technicals say it breaks through the support. I expect the NASDAQ breaks that support. The leader has already done it in a big fashion. So has the Dow Jones Industrial Average. So has the S&P. The NASDAQ certainly will. Let's look at another chart here. Traders, the euro, another market that had a major failure right at the good old OMNI average, but bang, failure. Breaks down from this parallel channel right here, and now you are in a bit of a tailspin. Euro looking quite bearish. Euro looks like it's got more downside. Then there's this making the matters even worse. Copper, as we've told you, can very well be an economic indicator of activity, of course. It is an indicator of economic activity. It failed at the 200 bar moving average a long time ago and had a severe breakdown. Well, we got above it and started playing around here for a while and spent a bit of time above it, but look what has happened in the last 2 days. Here's where we sit now. Here was the 200 bar moving average. This is right now live at the moment. We are below that average and beginning to do it again. Failure at the 200 bar moving average. That does not bode well for a rally in the U.S. stocks. Then we have this. What's making copper drop? What's making the ES finally have a little bit of weight on it? What is knocking down our commodities? The dollar index is in a spot that dynamic movement is expected, and here is why. Dollar index, US dollar index on a weekly bar chart, overlaid with the 200 bar moving average. If you recognize anytime you get around this 200 bar moving average, a dynamic move takes place. Look at this. Every time we get around it, some kind of dynamic move takes place. These are weekly bars, traders. Weekly bars. That means dramatic movement, because if this was a daily chart, it would be like this. Instead, it's a weekly, so it's in one bar. Dramatic movement anytime you get around the 200 bar moving average. Once again, you get under it, look at the break. You get over it, look at the rally. We got under it. Now look at this. We're here right now in the dollar index above the average, and that should give us dynamic movement. If the dollar has dynamic movement to the upside, rest assured, the euro currency will have a dynamic move to the downside. NASDAQ and Russell and E-mini will jerk around for a bit, probably have a couple of down days, but believe it or not, the dollar and the U.S. stocks can easily rally together in a recovery. So I'm not very worried about the E-mini, S&P, and the NASDAQ. However, the analysis points to lower in those markets. The charts are pointing lower. Then I say the market goes lower. My opinion is not in this picture. We only use the graphs before your eyes. So traders, you've seen the charts. There is my technical argument for why the red omni sits on the board, for why the NASDAQ and ES cannot continue to go any higher. Their leader is pointing lower. The followers will follow the leader. We have a red omni on the board. The technicals that we use to come up with our omnis are all pointing down in the Russell, in the NASDAQ, in the emini S&P, and in the euro currency. And the opposite is true in the dollar index. They're pointing up for the trading session of Thursday. So that's the way we will start this trading session. As we know, all of us, whoever doesn't know, listen up. None of these techniques work 100% of the time. A stop is your best friend if for some reason the market turns around and goes straight up tomorrow. Your stop knocks you out. You stop losing if you're short, and you can sidestep things and collect your thoughts and re-enter the market if that's what you choose. But without the stop, the market can just continue up, 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 and you can lose a ton. So make sure you put your stops in. I don't care how brave you think you are. Put your stops in. Nobody can stop a flash crash. If your stop's not in, there's no way for you to get one in. Put your stops in. Put them in first. Try to keep your emotions out of trading. There's a great thing you can do to help yourselves with that. It's come to my live chat room at livewithoscar.com, where I will keep your emotions out of your trading. And if you can't do that, then say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Yeah. Here we go again. Video 826. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.